I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. USDA Day here on October 12th, so a lot of action in the grain complex, a little bit of action there late in the day in the cattle and lean hog complex as well. So we're going to touch on corn, soybeans, and live cattle in today's session. If you can hear the sirens in the background, just bear with us. It's the norm here in Chicago, so we're kind of used to it. It's like sleigh bells on Christmas here. Nonetheless, we'll kick things off. We had the USDA report, as I had mentioned, came in bearish. Yields were increased, which we were kind of anticipating, and I think a lot of other market participants as well. The USDA has the corn yield pegged at 176.5. That was about a half bushel more than the average analyst estimate. And for soybeans, we came in at 51.5 bushels. That's 4/10 bigger than the average analyst estimate. So a little bearish, but it wasn't like, holy cow, this is one bearish USDA report. But it was enough to trigger some selling here through today's session. Now, looking at the charts and the technical landscape and where it puts us here going forward, the corn market, we sold off today, but it wasn't as destructive as what we saw in the soybeans and corn. Basically, we continue to believe that there's going to be a lot of opportunities for market participants on both sides of the market. There's a little bit of support here at the 618 retracement. Now tested, broke down a little bit intraday, but held into the close, which is encouraging. And we wouldn't be surprised to see this chop continue in the neighborhood of 520 to 540. So right smack dab in the middle of that is at 530. There's not much of a trade, but at the low end of that range near 520, I think there's an opportunity to give it a shot to the long side, a break and close below today's lows. You take your medicine and move on, because that would probably spur some additional long liquidation, potentially taking us back towards that psychologically significant $5 handle, which is also technically significant. It was a low back here in May as well, in the middle of September. Now moving over to the soybeans. Soybeans obviously rolled out of bed. The chart continues to look just terrible, I guess would be the way to put it without using any vulgar language. We failed against resistance last week, 1260. We were kind of thinking that we might hold a little bit better near that 1230 level, but yesterday's close was the lowest close since this big move higher back in March. And that kind of set the table for some weakness in the overnight session. And the lack of China in the flash sales also put a damper on things, and coupled that with the bearish USDA report, and you've got us making a move towards this March 31st low, which comes in near 1180, 1185. We wouldn't be surprised to see the market maybe take a stab down there, but we are the most overbought or oversold that we've been since making some of these lows. So a crowded trade. That doesn't mean that we're going to see a slingshot reversal here, but it does mean that maybe the shorts are, there's not a lot of juice left in the grape to the short side, so to speak. So you look at the risk reward and where things lay. The bears obviously in full control here now, but I don't know that you'd want to be selling here for basically your objective 10 cents lower when there's 20 cents of risk to the upside towards this previous support level. So that's what we're looking at for soybeans. We wouldn't be surprised to see this support tested and eventually chop around in here in between a wide range. The bulls definitely need to get something going as far as the fundamentals go. The demand specifically, we haven't seen China show up there in holiday much of last week, but are absent late last week and to start this week. So it would be nice to see them come into the market and stabilize things and create a little bit more of a trading opportunity as opposed to just a waterfall where the bears just pounce on everybody. So that's what we're looking at for corn and soybeans. Moving over to the cattle complex, we've got December live cattle. We worked back up towards this congestion area. So there's also the 100-day moving average, which isn't showing on this chart, but it is up there near 131. And we've been talking since late last week and early this week and in today's report that this is an opportunity to sell against. We had, I think, a 505 rally last week, so $5.05 from the lows, which was encouraging, but I think a little too far too fast. So we're looking for a little bit of a pullback here towards 128.5. If you had sold the top end of this resistance, look at potentially reducing some of that short exposure near 128.5, or if you want to be long the market, I think 128.5 is a good place to look at stepping in, or at least getting the toes wet a little bit. So those are some of the key levels we're looking at for corn, soybeans, and live cattle. If you've got any questions, feel free to give us a shout. You can email me directly, Oliver@bluelinefutures.com. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.